let's take a look at Kenya's MPC decision first of all, and how you anticipate markets are going to react to that decision, because it came as quite a big surprise, a cut of 25 basis points being introduced.
Come again, please?
Just looking at yesterday's MPC decision in Kenya, where rates were slashed by 25 basis points, a pretty surprise move coming to the fore. How do you anticipate markets to react?
Well, I don't expect the market to react on the short term. I think we should be looking for early to mid next week to see any changes on the market. I believe that what's going to happen for now is that analysts will still continue to keep their focus on the upcoming results, and we do expect that the market will start to see more activity as we go into February.
In terms of possible reaction from the banks themselves, I mean, how do you anticipate banks to react here? Because we know that they've been pretty resistant in the past to lowering their interest rates or their lending rates in tandem with that of the central banks.
Well, I think most banks at the moment are looking towards increasing their products rather than lowering interest rates. But we did see a lot of them do just that. That is, decrease their interest rates so that they could at least increase their loan books. We are actually right now seeing a lot of activity, especially on NBK, which is expected to announce their dividends for the first time. We are seeing a lot of dividend seekers now taking positions as they anticipate that sector to begin to do the announcements.
Taking a look at NBK, because you've touched on it there, it's rallied 23% from mid-December, and as you say, on anticipation of that first divvy payout after 12 years. What's your view on National Bank of Kenya? Are you a buyer at this stage?
Well, NBK is trading at a PE ratio of something like 8.1. Its peers are trading at a PE ratio of around 20. We expect that stock should continue climbing until it reaches around about a PE of 20, and therefore we do expect that they'll be giving a dividend of between 2 and 4 shillings, and that the share price could go up to the 70s to between 70 and 90 shillings. That's a very big margin, but I believe that it should keep going up.
That's a very interesting dynamic then that's playing itself when it comes to the mid-cap banks, because they are actually very firm. As you say, they're sitting at 20 PEs, and it seems that that trending higher still persists. What's behind this drive on those mid-cap banks at this stage? Also in anticipation of earnings?
Yes, we are seeing the mid-cap banks now taking over from the larger caps. We've seen the foreign-owned banks begin to take a more conservative stance, and that has given an opportunity to the mid-cap banks and the local banks to increase their expansion fray, and that has caused a lot of interest from the public, the investing public, in those banks, because that is where valuations are showing growth, and that is where we expect capital gains and dividends to begin to increase.